Hello, I'm talking to Ryan Kelly, who is the Chief Investment Officer for Legato Financial Group. Ryan, first of all, thanks for joining me. I'm going to start at a high level. What is your overall investment philosophy, and how does it guide you as you manage portfolios?
Yeah, well, that's a great place to start. So our philosophy is centered on long-term discipline investing. We believe in building broadly diversified portfolios designed to weather different market conditions, different market cycles. But we also make a lot of tactical changes to take advantage of short-term trends and price dislocations. Every investment, though, very importantly, is always tied back to your goals, your time horizon, and your comfort with risk.
I see. So when it comes to choosing specific investments, whether it be stocks, bonds, or other asset classes, how do you and your team decide what to buy, what to hold on to, what to sell?
Yeah, well, we start with a structured process that combines both data and judgment. We start by defining a few macroeconomic trends that we believe will drive performance over the next few months. Over the past couple of years, the biggest trends have been the adoption of artificial intelligence and kind of the power and resources behind bringing the adoption of that new technology really across the world. From there, we dive into individual securities. We use fundamental analysis, risk modeling, and valuation metrics to identify just really things that we think are undervalued or have the ability to grow in value in the future. And then finally, on a regular basis, we go back and review each individual holding to ensure that our original thesis is still valid. And if not, we determine an exit strategy.
That makes sense. So how do you define and manage risk across client portfolios?
Yeah, so we want to make sure we're defining risk not just as volatility or the probability that your assets go down, but also what are the chances that you're able to fulfill your goals. Really, risk is a very individual factor for everyone. Everyone's a little bit different. Everyone has slightly different goals and what they're trying to achieve. So we need to make sure we're taking those individual concerns into each portfolio decision that we make.
So Ryan, how do you measure success? What benchmarks do you use to evaluate your performance?
Success is really measured two ways, relative and personal. On a relative side, we look at benchmarks. The S&P is probably the broadest, or at least the most widely adopted one that we pay attention to. We also look at bond indices, maybe blended indices, depending on what the client's goals are. But much more importantly, we just want to make sure that our clients are progressing towards their financial goals and doing so at a level of risk where they're comfortable.
Okay. Well, finally, I'd like to know how you're responding to today's market environment. What adjustments are you making right now?
Well, markets are always changing, and my answer to that, if you asked me yesterday or tomorrow, would probably be different than it is right now. But we're in a very I would say, strange market. We've got a government that's closed down right now. There's a lot of concerns about inflation in the past, potential inflation in the future, taking a look at a lot of different risks really out there in the market. So very rapidly moving. And we're looking at something right now where we have people saying, technology is a bubble. Is it something that we need to compare to previous bubbles in the past? Or is there an opportunity where some of these AI names are going to double from here? We're also looking at what's happening with interest rates, what the Fed is doing, and definitely potentially making some adjustments based on monetary policy. But really, we don't know exactly what's going to happen tomorrow. We're just trying to position our portfolios to be best prepared for what we think is going to happen.
This is great information. You mentioned the Fed, so I'm going to close out with this question. What's your opinion on the recent Fed meeting, and how are you responding?
Yeah, so we just got a rate cut, and the supposed smart money right now is saying that we should get another 2 by the end of the year. So short-term interest rates will be 0.5% lower at the end of the year. And that's something that kind of ripples through the economy over time. It's also something that affects a tremendous number of different industries, whether it's utilities, it's the ability of a lot of companies to borrow. So it's something that changes everything that's going on in the economy. So we're watching it very closely. We've also, again, with this government shutdown, we could have potential impacts in the employment market. There's just a tremendous number of things that are happening. So we're making a lot of adjustments, potentially on a daily basis.
Ryan, thank you so much for the conversation. Once again, this is Ryan Kelly, Chief Investment Officer at Legato Financial Group. This is just a small piece of what they do here at Legato Financial Group, and I encourage you to give them a call, contact them today.